Hi everyone, my name's Darryl Panes, CEO at As Good as Gold Australia, and today once again I'm joined by my brother Brian and partner at As Good as Gold.
Thank you, Darryl.
Brian, and today we have a very special returning guest, none other than the Chief Marketing Analyst at ITM Trading, way over there in Phoenix, Arizona. I refer, of course, to the incomparable Lynette Zang. Good morning, Lynette.
Good morning. I'm very happy to be here, although it's afternoon for me, but that's good.
Good morning, Lynette.
And it's going into winter. You guys are going into
Summer.
That's
Yeah.
it.
We had a long winter, so we're very glad of the summer months coming up.
Yes. And we're also very glad, Lynette, to be interviewing you today. I've got to share this with you, that every time we say that, which hasn't been often, but we've had the opportunity to interview you a couple of times before, Lynette. And every time we do, the response is, really?
Yeah.
Wow.
Yeah, that's
Lynette
right.
Zang.
You've got a good name over here. Yeah.
You have a wonderful following over here in Australia, Lynette. I can, I'm sure all around the world, but I can speak about Australia specifically. Lynette, the world continues to swim in debt. Quite clearly, we have never seen the amount of money being printed now. We've never seen it to this degree before. Okay, global debt's gone from 100 trillion to 300 trillion in the blink of an eyelid. So interestingly enough, it took 2,000 years to get to 100 trillion debt, global debt. And in the last 20 years, it's accelerated to 300 trillion. So an increase of 200 trillion in 20 years. So I believe entering a period where we're looking at massive growth in precious metals. I think they're just going to explode. So what I'd like to do is talk a little bit about the last 20 years, just briefly, highlight where gold and silver have been, what they've done over the last 20 years, which then places us in a position where we can talk about maybe what's going to happen in the next 20 years. So let's have a look at this. Year 2000, gold was around 440 Aussie. It's now, say, 2,500. So it's up 570%. Interestingly enough, that's around about 27% a year. Annual growth, average, which is pretty spectacular. I know that we talk about gold as being a protector of your wealth and insurance, but hey, and some people don't refer to it as an investment, but hey, at 27.1% per annum average, that's pretty good. Look at America, the US. So we've got gold in 2000 was around $282, and now it's around 1,800. So it's a little bit better than the Aussie dollar. It's up 600, well, so far as the return is concerned, up 650%. So then you've got silver, hasn't performed quite as well, but hey, 420%.
Not bad.
Aussie, $8 up to around $33, 420%, as you said, Brian. Not bad. And in US, up 465% from $5.20 thereabouts up to $24 thereabouts. Hey, these are fairly spectacular returns, and I talk about this regularly when I compare gold returns to real estate, and gold comes out well in front. We spoke about this just in our last interview with David Morgan. But keeping all of this in mind, Lynette, my question is this. Do you believe that the economy is in a worse or better state right now? I know it seems relatively obvious, but do you believe the economy is in a better or worse state now than it's been for the last 20 years? I want your impressions on that. And then I have another question that I'll ask you once you've completed that.
Okay. So if we go back to 2000, you also have to look at what was happening, which was Y2K. Yep. And interestingly enough, as scary as a lot of people took that to be, what you saw was the spot market manipulated down. So when I technically, I had gotten about maybe 4 or 5 different confirmations that we were entering the final phase of this currency's life cycle. And I came to ITM, it was actually June 28th of 2002. So that, and then the final confirmation of where we were in that trend cycle came in October. I think it was October 9th, but I could be off a few days of 2002. So when you ask me that question, since I'm looking at patterns and cycles, what I saw that, yes, we're much worse off because we are that was the beginning of the end of the fiat money experiment. And now we are at the end of the fiat money experiment. And, you're talking about all the massive amount of new debt that's been put into the system, not just over the last 20 years, but look at it over the last year and a half. It was just a big excuse to really flood the system with new money. And honestly, what you're looking at is every time a central banker prints new money, the money that's already out in circulation loses a lot of value. So even when you're looking at those returns, since that's gauged by the spot market, which is a contract on gold and a contract on silver, easily created, easily manipulated, the reality is those spot markets do not reflect the true fundamental value of an ounce of gold or an ounce of silver. If it was in a true supply-demand market with central bankers accumulating gold, especially, actually, I could be off on this because obviously I don't have the graph in front of me, but central bankers stopped selling and leasing gold in I think it was 2006. So before the great financial crisis, there was already a shift in central bank sentiment and buying and they don't buy the contracts, they buy the physical metals. So, I mean, if we were in a truly free market, then you would likely see gold somewhere in the vicinity of 50,000 an ounce and silver somewhere in the vicinity of 600 or so an ounce. And so I could tell you this, I am not converting my gold. And I bought, I remember buying silver at $4.38 for one of these little peace dollars, right? Now I think I don't really work in that area anymore. I mean, I keep buying, but I don't really pay attention to the fiat price because I don't care. This is my insurance and I know it's severely undervalued. So even if I'm spending, $35 on that now, or even 55, it's still severely undervalued. And that's the only kind of risk that I really see when we put wow, it's done this much every year. What are you going to do? Convert it into, paper that is really worthless? I mean, seriously.
Seriously.
Oh, very seriously. So it's quite clear that, okay, we look back at that 20-year period because a lot of people don't understand gold. They would, if you spoke with them about these sorts of returns, they would just say, you have to be kidding. You are on another planet. But in fact, they are incredibly accurate. So my point remains, if gold is up 650% in a 20-year period, US, then what could we possibly expect from gold over the next 20 years?
Oh my goodness. Yeah, we could seriously see it go up, 3,500, 5,500%.
Yeah.
And that would not be outrageous because that's how they reset a currency when all confidence is lost, and then they put gold behind it. So, it will make all of that look like chump change. Additionally, there was a recent report that was just put out by gold.org. And according to their studies and their surveys, gold is the most liquid of all of the markets, more liquid than treasuries and other government bonds. I think the only thing that they said was more liquid was the S&P 500, and it wasn't by much, and that's only for now. Because all of that debt that you were talking about, and there are all sorts of, ways to leverage these markets. Well, they have to keep this bubble floating, and they're out of tools. They're absolutely out of tools. Can they really raise interest rates in this environment?
No, for 1,000 reasons they can't. Yeah.
Exactly.
Nothing like the Volcker days. No, absolutely not.
Well, and there is a big part of me when you talk about Paul Volcker, there is a big part of me that wonders if that wasn't part of the plan to give themselves enough ramp room by having those interest rates so high so that every time we got into a recession, well, what did central bankers do? They dropped interest rates like 5.5%, 5.75% to stimulate borrowing and spending. But now we've seen a lot of emerging market countries in South America and elsewhere in the world that have tried to fight inflation by raising the interest rates. And guess what? It's not working.
No.
That's very true.
Interestingly enough, I just did some quick sums, not that it's all that hard, but at 650%, right, we go back to this again, the growth in gold, if in fact all it did was achieve the same result again, then you'd see gold at $12,000. So Jim Rickard's talking $10,000 gold, $10,000 to $15,000 gold is pretty much on the mark. But that's just based on growth, typically growth as we've seen over the last 20 years.
He didn't see the money growth in the last 20 months.
No, exactly right. So, it's ready to explode.
It's ready.
It really
absolutely.
is.
Yeah.
It's like a spring. You hold your hand on a spring and you can keep that spring down. But at some point, it either builds up enough friction that it pushes your hand away.
Yeah.
Or I think in government's case, when they need to reset everything, then they remove that hand. And that's why when I was saying going up, 3,500% or more, we have recent examples of that happening.
Yeah.
A suppression, and then boom, 3,500, 7,000%, but what that also means, and what you're talking about, how much has that currency gone down in purchasing power value? That's really what gold is reflecting, even as they've been suppressing it.
Yeah,
correct. 100%.
And Lynette, to follow on from that, the question that I would put, every now and again I go to the website US Debt Clock, and I finally realised the other day that I used to see the M1 money supply, but they've taken that off now. Now it's M2 money supply. But what is very interesting, and we're on the subject of inflation and things going up. So my small question here, the Fed has taken the M1 money supply as of the beginning of 2020 of $4 trillion to the present day to $20 trillion. So the M1 money supply back in 2020, $4 trillion. Today, $20 trillion or close to it. So that's an increase of just over 400% in 20 months. Lynette, do you believe that inflation can be controlled from here? No, I didn't think so.
No, I do not. No. And this morning, Fed Chair Powell and Janet Yellen were in front of the Senate Banking Committee. And he actually agreed with me. Now, he didn't use my name specifically, but he is taking transitory out of his discussion on inflation. And he has admitted that it is stickier and higher than they expected. What a shocker. But don't worry, because 2022, it's going to magically just go down. Yeah, I don't think so. I think it's way stickier than what they're anticipating. And I think we're at the start of the hyperinflation.
Yeah. Yeah.
I mean, I don't have technical confirmation on that yet, so I have to say that. But in my gut, that's what it feels like to me.
Yeah. Over here in Australia, we have a little simple expression that we cross our fingers and hope for the best. I think that's gone by the wayside. Thank you for your comments, Lynette.
You hope for the best and you plan for the worst. That's what you do. You hope for the best and plan for the worst.
Very, very true.
And then you're covered.
It's the only thing that we do over here. Okay, following on from that, Lynette, your friend and ours, Egon von Grass, just recently commented that I quote, "Evil is the root of all fiat money." Can you explain what Egon is really saying, and maybe how it can be changed from this for the better from this point? So I'll read that quote out again. Evil is the root of all fiat money. What do you think? Absolutely.
Because it's really all about power. And if you control the money, what did Rothschild say? I care not who rules. If I make the money, I make the rules. He didn't say it like that, but you get the gist of it. Yep. And I think that's what Egon was referring to, because it really is about power. And Now, is there any way to change it? Yeah, if we stand up and we refuse to use what they have in mind for us, which is the central bank digital currencies that is programmable flipping money. We want you to spend. Okay, you watch your principal evaporate as you're looking at your account and you're not doing anything with it. Well, then what are you going to do? You're going to go out and spend on anything. Won't even matter what it is, because you're trying to hold on to the wealth that you worked for. That's what money was created originally so a society could specialize. That means you're getting paid for your labor in this fiat money that by design loses value over time. So you can't save it. And one of the primary, in my opinion, one of the primary functions of money is to hold its value over time so you can plan for the future.
Yep.
So yes, evil, I agree with him a bazillion %. It's despicable. It's disgusting. And this is why we have global income and wealth inequality by design.
Yeah, look, I've always got back to what I call the nitty gritty of money. And you look at gold, you look at fiat currency. Gold grows by 1.6% a year, which is a reasonably good growth for an economy, 1.6% a year. But there's a lot of labor. There's a lot of labor used to get that gold from under the earth to on top of the earth. But you have a look at fiat currency, or any dummy can print money, right, or print a piece of paper and put a value on it, right? But the debt that goes along with that piece of paper is just astronomically unreal. So, and that's why, in my opinion, that gold will always outpace fiat currency over the long term. We've proven it time and time again.
And let me just add to that a little bit, because gold is used in every single segment of the economy. So 100% of the time you have demand. If an economy is slower, you'll have a little less demand. If it's heated up, you'll have a little more demand. But with fiat money, it's used in one place only. Well, okay, two. You want to play central bank?
Oh, I love it.
Thought you would. That's how easy it is to make fiat money.
Yeah.
It's actually, no, you just push a button and it's just a bunch of...
You got zeros on the end. Yeah, exactly. A last question before Darryl takes over from me.
Did I throw you off?
Oh, I love these sessions.
I know, but we talk about such awful things. It's good to have a little levity in there.
Of course. Now, this one this question, it really comes from an article I read from Jim Rickards. I've got all of his books, and he makes a lot of common sense most of the time, right? Pretty well all the time. But, sometimes you don't have to agree with everybody, but just have a look at the common sense behind the question and the statements. Okay. It says, Lynette, a statement that Jim Rickards recently said is about US dollars 130 trillion has been lined up for climate alarm investing. I will read out a passage from the article and ask for your comments about where does this money come from. Okay, here we go. I'll take this little article here.
I'll do my best.
Yes, no problem. Now this article, please bear with me, maybe goes for about a minute of reading. Okay. Climate change, he says, climate change is real. Climate always changes and always will. All right, that's the topic of the article. Mark Carney, the unofficial chairman of the global financial elite, has announced that managers of 40% of the world's financial assets, about 130 trillion, have pledged to meet the goal of the Paris Agreement. This means they will only invest in clean energy generation and will divest in oil and gas companies, as well as not investing in countries that fail to meet the Paris pledges. A little bit more. This pledge is a fraud because most of the pledges are just that, pledges not backed by any action. The bigger polluter in the world is China, which produces 50% of its electricity from coal-fired plants. You won't see major asset managers looking to run away from China. To complete, climate alarm science is a fraud. The Paris Agreement is a fraud, and the pledges of these asset managers are a feel-good display. There is no crisis. Still, that won't stop elites like Carney from trying to dictate your life using banks and capital markets as a club, unquote. So, where this 130 trillion, we know we're 300 trillion in debt. And we're looking at another 130 trillion as a pledge to go from, and I'm not saying we shouldn't be looking at natural energy sources, but not everybody sees it the same way. What's your feeling? Where's this 130 trillion coming from?
Well, I mean, derivatives and leverage make it really easy to create as much fictional money as you want. And as he said, these are pledges. These don't necessarily mean that they have to back those pledges up with money. And the other part of it is early in my career on YouTube, I interviewed David Dubine. And he was talking about the grand solar minimum, which is a normal historical weather pattern that shifts. And that's what we're in. And in fact, I even put in aquaponic systems in my garage so that I could control the temperature and therefore continue to create food. Nice. So, it is really interesting because we can see that things are shifting, but I would agree with Jim in that they're not shifting in the way that the guys in power that are trying to scare us about things would want us to believe. And the cost to do that is frankly astronomical and could be used to push us into the new system that they have in mind. But I don't think it's fully ready yet. The CBDCs, we're looking at social, economic, as well as financial. Mm-hmm. So, when you can create as much money as you want by growing debt, well, the reality is what goes up must come down. And I think we're already seeing that debt bubble popping in that global central banks are really out of their tools. They don't have any tools left. They can't raise rates into the face of this massive debt. And, the Fed is going to speed up his tapering, which means just buying a little bit less of mortgage-backed securities and treasuries. And the markets don't like that.
Yeah.
So, you got to look at who's really running the show, because much as we want to think that it's the central banks and the governments that are doing that, I'm personally not real sure that it isn't the traders and Wall Street that are dictating it. And I think what we're seeing right now with what's happening actually on a global basis is that traders are testing the limits of what they can get out of the central banks. And it's really interesting between the cryptocurrencies testing those limits and the traders in the markets testing those limits. We could not be living in more interesting times.
No. Just to finish off, I think back to when the Federal Reserve was formed, or it came about in 1913. I read many stories with reference to, especially from the Creature from Jekyll Island, the book, and a cup of coffee, I think in US dollar terms might have been about a dime or 5 cents. But now in Australia, 5 cents, in 100 years, it's gone from 5 cents to $4.50. So you see the inflation here. It creeps up on you. And I think if we start printing this extra 130 trillion just to look at the climate side of things, right? I think, your cup of coffee is going to be $20 in a couple of years' time. Darryl?
I don't think it'll take that long.
I don't think it'll take that long either.
Hope for the best.
Hope for the best. And I will say I'm very happy that I got my bug out house.
Yeah.
Because it's scary out there. It is.
It is scary. It is. Yeah, exactly.
Lynette, Jim Sinclair has passed a comment a number of times, and we've spoken with Bill Holter a number of times, well, his partner, and we've made reference to this quote, and I'd like your comments. Jim talks about, or makes reference to, becoming your own central bank, owning gold. And the interesting thing about central banks of any significance, let's forget Australia because we are a fairly poor illustration, but most major central banks around the world own gold. Let's just have a quick look. Ben Bernanke, I think, was quoted once as saying that gold was just a barbarous relic.
Yeah, or tradition.
The barbarous relic comment came from Warren Buffett's Charlie Munger.
Oh, Charlie Munger, was it?
Charlie
right.
Munger.
Okay, well, that'll make sense. So, but central banks hold it in high regard in real terms. So, interestingly enough, let's just have a look at the numbers from the central banks and their holdings as they currently stand.
Yeah.
The US is just over 8,000 tonne, 8,133 tonne. Used to have 20,000 tonne just after World War I, when they sold their goods and services, of course, to Great Britain. Wouldn't take the British pound. Gold was the only money that they would accept. So, but they've lost a big chunk of that. They're now down to around 8,000 tonne. Germany, 3,359. This was as of September of this year. Italy, 2,451 tonne. France, 2,436. Russia, 2,298 that we know of. Switzerland, 1,040. Japan, 845 tonne. Australia, of course, falls well short of all of that. But then you've got China, reportedly holding around 20,000 tonne of gold at the moment. And that seems to be fairly close to the mark. So I can see where Jim's coming from with this. These guys all own gold. So, Lynette, the question I'd like to ask you is this. Could you please explain what he really means by that? And look, why do central banks own gold? What is their main purpose?
Great question. And I believe that the reason why central banks own gold is to stay in power, because whoever holds the gold holds their purchasing power, and therefore in this transition will remain in power and fiscally influential. And that's exactly the same reason why everybody needs to own gold. Yes. And become their own central bank. I mean, I'm definitely my own central bank, because I want to remain free. I want to remain in control of my life. And if everything that you hold is inside of a system that's easily monitored and easily stolen from you, even right in front of your face. I mean, when the stock market, if you own a whole bunch of stocks and the stock market drops, so too bad, so sad. What are you going to do about it, right? But when you look at what the Bank for International Settlements, in their report that they did, it was either 2019 or 2020. I can't remember which right off the top of my head, but they looked at gold's role inside of the foreign exchange and currency markets. And I don't remember all the conclusions off the top of my head, but there were a few that I really liked a lot. And one was that gold is the only financial asset. These are their words. The only financial asset that runs no counterparty risk. And another one of my very good favorites is that gold held at home runs no political risk.
Yes.
They also state that it has been empirically proven to protect against inflation and be the best hedge in a crisis. That's their conclusion, the Bank for International Settlements. So that's why central banks hold it, and that's why everybody needs to be holding it. And, keep in mind too, this is funny money, but really, what does it say on the top of the bills? This is a note. Well, a note is a debt instrument. And if the problem is too much debt, well, then how does holding a piece of debt, a contract, help you? It doesn't. You don't own it. You don't control it. And you're working for it.
No, it makes a lot of sense, doesn't it?
Yeah. Look, interestingly enough, Fort Knox is supposedly holding, we've said this already, just over 8,000 tonne. It hasn't been audited. I don't believe there's been an audit on Fort Knox since 1953. Now, let's just imagine this for a second, and it backs up exactly what Lynette's been saying. Can you imagine what would happen if they did an audit on Fort Knox only to find out that it was empty? No gold at all. Now, the US holds a reserve currency status currently. There's there's no gold at Fort Knox. What's going to happen? Well, I can tell you what's going to happen. The economy would explode in 1 minute, and the American dollar would go from this to this in the blink of an eyelid. Okay, so that's what will happen, and Lynette's right. That's what will happen if you personally don't have gold, because you will have no value, you'll have nothing of value at all. You will be reliant upon an absolutely worthless currency, because that's the way it's heading right now.
Yeah, I'd have to agree. And even if you wanted some Bitcoin, well, you pay for your Bitcoin out of currency. If the currency is just a piece of paper, you won't be able to buy Bitcoin because it'll be trillions and trillions of dollars to own a Bitcoin.
When you become reliant on the state for a handout, because if your currency is worthless, you're then reliant upon the state for handouts.
Yeah.
Right? At that point, you have lost your freedom. You have no power, no influence, no control, nothing.
No.
You lose your freedom. And that's why we're really passionate, Lynette, about freedom. We produced a coin just recently. We didn't personally, but our refiner did. And it's a freedom coin. And I'd just like to share that now because it's only been out for about 3 days. We've had it out in the marketplace, being promoted now for 3 days.
Yeah, last weekend.
Right? So it's available on our website right now. So you can purchase that in a pre-order in Australia for the moment. We're hoping we can get to the US, but it's certainly available here in Australia. But on the front of that coin is the phoenix rising from the ashes, wrong side, is the phoenix rising from the ashes, and with the Southern Cross, of course, in the background. And basically, the phoenix is symbolic of rebirth, hope, renewal, progress, end of oppression, and eternity. And we believe that right now that's pretty appropriate. So where this has exploded, hasn't it? The sales of this particular coin have exploded. Around the circumference, Brian, if you could just hold that up again. Around the circumference, you've got freedom is our statement, freedom statement. Freedom is only acquired through the constant pursuit and unrelenting struggle to reach it. Very powerful statement. Once again, freedom is not going to come easy to any of us. I mean, our forefathers fought really hard for all of us, and some of them, of course, paid the ultimate price. But we need to secure it. We cannot afford to lose and give up our freedoms as easily as it seems we are around the world at the moment. So we've got to get up and fight. It's a fight. We've got to put in the effort. So we're excited about it. We're excited. It's a conversation starter, isn't it, Brian? It's a conversation piece. If you have something in your pocket, a freedom coin here, and you're in conversation with a like-minded person, but they may not know and understand gold or silver like we do. And so share the message, and they may share the message with someone else and someone else and someone else until we have an avalanche of interest in precious metals, people asking questions and then going out and doing their research. And then maybe we can get on top of this and get on with the lives that we once experienced and would like to have back again. So,
can I add something to that too? Because while, you said this is a conversation starter when it's in your pocket, but it's also real money.
yes.
That wherever you are in the world can be converted into any other currency.
Yes.
And I think that's, when you're talking about becoming your own central bank and protecting yourself and your family. And I mean, so much of what I do is about my grandchildren, because, I'm probably going to be around another, 35 years or something like that. But, my grandchildren are, they're just starting. They haven't even really started to live yet.
Yes.
And if we allow the powers that be, then what we have is the World Economic Forum. You own nothing and you will be happy. Well, you may own nothing, but I'm pretty sure, ask people that own nothing right now, and I'm pretty sure they're not real happy.
No, exactly right.
No.
I sometimes show a different side of gold and silver, mainly gold because it's easier to talk about. But just recently I purchased a gold nugget. I'm talking about a gold piece of rock from Kalgoorlie in WA, where most of our gold is found in Australia. Because at the odd occasion people have said, well, we don't recognise, you might take this with you don't recognise this around the world or anywhere, anywhere where you maybe haven't seen a coin like this. But I just say to the client, I bring out this little piece of gold rock. It weighs 38 grams and it looks like a rock, So I say, okay, if you found this metal detector out in the gold fields, metal detecting, you find this piece of rock, it looks like a piece of rock and it's yellow. I say to them, now hang on, would you throw this back and look for a better looking rock? And of course, there's no way. So it doesn't matter where you go throughout the world. Silver and gold is money, and it's very, very valuable.
Exactly. And that's the piece. It is portable wealth. So you can put it on your person, and no matter where you go. Now, there are different kinds of gold, too. Since you brought up the rock, this is actually... You brought up the rock. This, too, is actually... I don't know if you can see it.
We
can you see the gold flecks and the silver flecks in there? So this is another way that you can find gold. But now, unlike your nugget, which is a much easier way to do it, there's a lot of work in refining that.
Yeah.
So it takes time and effort And it's used, again, I can't say this enough because I never really hear too many other people say this, and it's so important. It's that both gold and silver have the broadest base of functionality because both of them are used in manufacturing, in electronics, in the financial system, in jewelry, in food, in art, right? In medicine. There is a use that they have never figured out how to duplicate the attributes of gold and of silver in any lab. So they can't duplicate what this does. Whereas when you're looking at fiat money or financial instruments, stocks or bonds or any of that, it's used in one area. It's got a limited base of buyer. So what do you want in insurance? Do you want something that has the broadest base of buyer in all of those areas? Or do you want just in one area?
It's
like a stool. Do you want a
simple
stool with
answer.
a bunch of legs or one?
No, you want a broad base. That's exactly right. Yeah.
Oh, look. Once again, time really flies. We're not over yet, but what I would like to ask Lynette before we close today, if you do have any closing comments that you would like to share with our viewing audience today.
I really, the key is everybody has to have a plan going into this. And that I see so many people still procrastinating. And if they are stop procrastinating. You need gold and silver, but you also need food, water, energy, security, barterability, which certainly can be gold and silver, but can also be anything physical or any talents that you possess. And you need community, which we've got a big global community. That's why I'm here today, and it's great that we can do this because we really need to come together to help each other. And no matter what is happening in the world, you need all of those things to have a reasonable standard of living. So you need to get it done. I don't think I'm alone in saying I don't like what I'm seeing happening out there and how much our freedoms and rights are being constricted and changed and power overreach and all of this. And it scares the Hades out of me. So, a big part of what we do is planning so that you have a plan, because without a plan, you're planning to fail.
Yes.
You need to be aware of what's going on so that you can make educated choices that put your best interest first. That's what we do at ITM, and I know that's what you guys do.
Spot on.
So if people, the viewing audience today, Lynette, if they'd like to know more about what you do at ITM Trading, what would they do?
Well, they could go to the website. And then also YouTube. We have a very active YouTube channel where I try and translate the financial noise into understandable language. So it's hard. I'm telling you, I've been working on it forever and I will keep working on it, I promise. But ignorance does not make anyone immune. It just leaves them vulnerable. And I think that too many people are way too vulnerable and they've been way too sucked in to the system that's really there to take their wealth away. So if you go in and watch the YouTube, you go to itmtrading.com and there's lots and lots of information. We even have some things talking more about the rest of the mantra as well. So you're getting like a sneak peek because we're about to open up the site, where we'll talk about the whole rest of that piece: security, barterability. I have to do the whole thing: food, water, energy, security, barterability, wealth preservation, community, and shelter. That's the whole mantra. So we're going to try and help people get more prepared because we're running out of time for sure.
We are. And our good friend and lifetime mentor, Peter Daniels, of course. We've referred to Peter regularly with reference to what he had to say. And one of his famous quotes, of course, Brian, as you and I both know, "I do not care what poorly executed economic decisions are made in the world tonight. Tomorrow I'll still be able to party." Why is that? Because he's his own central bank. That's the reason he can afford to say that.
That's exactly right.
Yeah, and Egon von Greyerz, of course, who we all love dearly, says when asked the question,
most famous saying is that how much do I put into gold and silver?
Yep.
Whatever you can't afford to lose.
Yep.
That's the positive and exact answer.
Yeah. Lynette,
True.
Lynette, look, thank you once again. Thank you so much for your support of this channel. We always look forward to speaking with you. It's an absolutely wonderful, great experience. You're a very well-researched lady, and it's just a pleasure having you on. So we'd like to think that this will continue, our relationship, for years to come, and that we can continue to share this information with our audience. I'd also like to say thank you to our viewers and subscribers, of course, because they continue to support this channel. Every Saturday night when we post a new interview, they clamour for seats, and it's just fantastic to see. So that we thank them very much. And so until next time, stay well, stay focused, and goodbye for now.
Goodbye for now.